course, within the transfer pricing world, there's the OECD, and then there's the United Nations. What is the difference between the two? Nilesh, you want to kind of give us your perspective on that?
Yeah, what I can say is that OECD basically is an organization of mostly developed countries. That is how we perceive in India, whereas United Nations seek to take care of developing countries. And when we see the transfer pricing guidelines issued by United Nations, it is titled as Practical Transfer Pricing Manual for Developing Countries. That is more geared to the interests of developing countries, mainly that profit should not be shifted from developing countries to other low-tax jurisdictions. OECD guidelines and UN guidelines, for the most part, do not differ, except for some small things. For example, location savings, where profit could be shifted from a developing country to developed country. So in those matters, the United Nations guidelines are a little bit in favor of developing countries. Otherwise, as far as transfer pricing methods are concerned, arm's length standard is concerned, how to apply the arm's length standard, how to carry out comparability analysis under the arm's length standard, all those things are almost similar.
Right. So OECD, there's the UN, and of course, not surprisingly, the United States does its own thing, right? So, yes. So I've seen that you're US qualified. You want to comment on the US perspective?
Yeah, US has a detailed regulations, 1.482 regulations, which we call. Now, if we see the OECD guidelines, transfer pricing guidelines, and US regulations, again, there are not too many differences, maybe some nomenclature here and there. For example, one method which is very popular under the OECD transfer pricing guidelines, which is applied all over the world, we call it transactional net margin method, TNMM. In US regulations, it is called CPM, comparable profits method. But it works almost in a similar fashion, not much of a difference. Second thing is on services. Services, intragroup services between associated enterprises, related parties, connected persons. The US regulations are more detailed, I would say. Of course, in the latest 2017 and 2022 OECD transfer pricing guidelines, they have also included a detailed guideline on this intragroup services. But I think the US regulations are more detailed for applying it practically to determine transfer prices of intragroup services.
Okay, and the US is also different in terms of, and guide me if I'm going astray, in terms of the actual documentation. So like the OECD, the UN, they talk about master files and stuff like that. With the US, they speak about the methodologies, but in terms of the packaging of the documents, they're not as prescriptive. In addition to which, some of the forms like the 5471s, 5472s, that they have already in a different way facilitate the disclosure of those intercompany transactions. Do you want to comment on the documentation piece?
Documentations are definitely different in different countries. Though OECD now has recommended this, what we call 3-tier documentation, local file, master file, and country by country reporting. That is for big MNCs having turnover of more than 750 million euros. As far as local file is concerned, every country has its little bit of difference. Every country has its own regulations, and there is some difference here and there. So in that sense, definitely US documentation requirements are definitely different from requirements of India, requirements of other countries. But primarily, it is all this documentation is for the taxpayer to prove that my intragroup transactions are at arm's length price. So this taxpayer has to discharge that burden of proving that my intragroup transactions between related parties are at arm's length price. As far as what evidence is to be included in the documentation, there could be some difference here and there.
And cool, do you want to comment on Canada? What's the CRA's perspective in terms of documentation? How is it different from other countries like the US?
By CRA, you mean Canada Revenue Agency?
Yeah, Cool is based in Canada. So, yeah.
Hi, Nilesh. I can answer if you're okay.
Yeah, please.
Sure. So, Darren, yes. But just listening to what Nilesh mentioned about the US, Canada, in fact, is more aligned with the OECD. In Canada, we definitely have those three-tier documentation requirements, which are already has been made a part of law, and there have been detailed instructions on how those have to be completed, and if there, if there are defaults, even CRA has brought in penalties for that. So these three-tier, again, just as a repetition to what Nilesh mentioned, are the master files. Where you generally, there are defined contents, what has to be there in a master file, broadly about the group, about what their products are, what their services are, and then a local file is more specific to that particular jurisdiction where for which you are preparing the transfer pricing document, and CBCR, what we call in short for country by country reporting, is where where you provide numbers, where you provide data relating to the sales and your workforce, your revenues and other stuff for each country that you're transacting with. Secondly, CRA in general, compared to, again, I'm sorry, I'm just trying to explain it the way I think it's easier for the audience, is that the US, as Nilesh mentioned, has very detailed transfer pricing regulations. Canada does not have. So Canada has, given an overall broad structure of how the regulations should look like. And that is the reason CRA often have to resort to OECD guidelines for additional references. So the Canadian jurisprudence is definitely, more, even in the course, references are given relating to OECD guidelines wherever the Canadian tax regulations are kind of not very detailed or not very descriptive. So, that way Canada is a little different than the US, but it is very consistent with, with the other countries where transfer pricing regulations are there.
Yeah, that's a... Sorry, Nilesh, you wanted to comment?
Yeah, Darren, what I want to say is that documentation, whatever be the details and specific particulars of documentation, may vary across different countries. But basically what I have seen that they mainly contain these things. One is, what is the transaction which occurred between the group members? Number two, what is FAR, function, asset and risk profile of the parties engaging into that transaction? What particular transfer pricing method, as Kul was explaining earlier, out of those 5 or 6 methods, are you going to apply to determine the arm's length price of the transaction, and why? Why you are choosing one method out of those 5 or 6 methods? Why you have to rule out other methods? So you have to explain that in the documentation. And then for applying that chosen particular method, which we call in India as most appropriate transfer pricing method, what kind of exercise do you carry out? Mainly that is comparability analysis. So that entire thing, what you do while determining arm's length price of a transaction, that entire thing has to be documented and presented to the tax officer.
Absolutely. It's all about the documentation and justification. And again, at the beginning, I was saying that the general public, the average person, has this unrealistic expectation because, they watch movies, they read something in the news and they see what Facebook or Apple or whatever is doing. And they think that, hey, I can just go to a low tax jurisdiction. I'm going to incorporate a company and set up an office, and suddenly I'll be saving all these taxes by having these related party transactions. Not understanding just how much work goes into justifying every single transaction must be defended, because the implicit assumption with the tax authority and the higher tax jurisdiction is, hey, there will be a natural incentive to try to shift as much profit as possible to the lower tax one, and they don't get that. But hopefully, this sort of interaction would help shine some light on that.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.